How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 with my Vanguard brokerage account that as of late almost seems impossible to do. And where do we even begin other than by way of sharing that the stock market is certainly not for the faint of heart. Now, just in the past couple of days here, the Dow Jones dropped more than 1,000 points, losing 3.1%. The Nasdaq lost 5%. And as for the S&P, it slid by 3.5%, making this past Thursday of last week the worst single-day drop for all three indexes since 2020. As for my personal account, we may have gained $217.36, but that is nowhere close to our record high where we once sat at over $93,000. We are currently sitting at $88,175.59 in the day. Now, in terms of today's video, I want to move in a bit of a different direction, talking tech before discussing three tech moves I feel are rock solid investments for the returns if you can in fact stomach the volatility. Now, before we get to it, tap on that thumbs up button as it greatly helps me out in growing this channel, and join me on the journey by simply subscribing if you haven't already. I'd love to have each and every one of you on this journey with me. Now, YouTube, let's go ahead and dive right in. So, of course, as many of you may know, I am a dividend investor through and through, with a vast majority of my portfolio invested in dividend stocks. However, considering myself a gambling man, I do in fact have some growth plays as well, some of which pay dividends while others don't, but that's neither here nor there. In today's video, I want to talk tech because there is money to be made, and in my opinion, there is no better time to double down on investments than when the market is in full fear and we only all ever embrace the market mayhem. Now, I think it is safe to say that the market is absolutely getting murdered in the technology sector this year, from Alphabet to Amazon, Apple, and Meta, as well as Microsoft, each of which are down 19%, 31%, 13%, 38%, and 17% respectively, with all underperforming the S&P 500, and those are among the fortunate ones, unlike, say, a Netflix that has dropped 65% in 2022, or Shopify down 70%. Now, what gives? We have a series of daunting challenges that have hit the industry all at once, including the flipping of some factors that once actually disproportionately favored the sector. For example, the Federal Reserve's rate hikes are actually now crushing growth opportunities for companies that are now dialing back in spending. We also have Russia's war in Ukraine, which is totally sabotaging demand around the world, all on top of uncontrollable inflation, which is tightening wallets, coupled with lockdowns in China from a variant that is now on the loose, and that ultimately just slows down economic recoveries. Finally, the supply chain that remains as broken gets. I know it all sounds bad, but we cannot panic, and we have to seize the opportunities when they present themselves, which leads me to talking about one of the best known companies in the world, certainly the most valuable. I want to talk about Apple, ticker symbol AAPL. It doesn't need much of an introduction and has made plenty of shareholders wealthier over the past several decades. It has demonstrated its ability to repeatedly create innovative tech products that captivate us all, and they just continue to lead the industry into the future. It's also worth noting that Apple has delivered through on robust growth despite its massive size and those who believe that Apple was becoming old news. In the past decade alone, its revenue increased at a compound annual rate of 12.9%, which translates to sales rising from $156 billion in 2012 to $366 billion in 2021. Now, more recently, Apple posted a March quarter revenue record of $97.3 billion. That's up 9% year over year. The iPhone fueled much of Apple's success over all of that time. Now it's the 13th generation and most popular smartphone in the world, in the pockets of over 1 billion people worldwide. Over that same period, all their product and service sales were up. And even more exciting news, Apple has two major products underway that I believe will rock and shock the world. The first of which is their virtual reality headset, due to come out in 2023. Leave it to Apple to ensure it is a first in class. And coming out in 2025, we're talking about the Apple Car, which I ultimately believe will be the only real major competitor to go head to head with Tesla. With all of that said, I do not want anyone to see Apple solely through rose-colored lenses. Apple is not without challenges. Supply chain disruptions are impairing its ability to capitalize on consumer demand. and really management only forecasts it will miss out on $4 to $8 billion in sales in its current fiscal quarter, solely because it is not going to be able to meet its full customer demand, and there is no telling just how long these headwinds will persist. But I am in serious doubt that Apple won't be able to pull through and prevail. Even Buffett is betting big once again on Apple. He recently purchased $6 million worth of Apple, which should speak volumes for us all. Now, Apple is currently down from its 52-week high, falling from around $182 to $157, roughly a 14% change, with their PE ratio sitting at 25.57. I'm not here to say that Apple is necessarily discounted. However, I'm going to go back to what Warren Buffett always shares, in that it's better to buy quality companies at fair prices than fair companies at quality prices. I am standing firmly behind Apple and looking to increase my position with Apple, especially as analysts only foresee continued growth, coming in at a median stock share price of around $191 per share and a high stock share price at $219.94. Now, as a dividend investor, I love investing into Apple because I'm going to be able to collect on that dividend as well at 0.59%. And while that's not as high as I would like it to be, I'll take it as I get to capitalize on such a rock solid growth opportunity. Moving right along to our second stock of the day, which is not a dividend investment, nor do I ever really foresee it becoming one. Let's talk about Meta Platforms, ticker symbol FB, which, as many of you already know, was once Facebook prior to their rebranding last October. Now, Meta is one of the stocks in my portfolio that really doesn't belong, if any, but I feel it has plenty of growth potential and is definitely worth the long-term hold, given their focus on the metaverse and the meta market. Now, their new strategy is rooted in their Reality Labs segment, which generated $2.3 billion in revenue just in 2021 alone by mainly selling virtual reality headsets, VR software, as well as their smart glasses. At this time, the Reality Labs segment accounts for about 2% of Meta's top line. However, it racked up $10.2 billion in operating losses last year, which again, without rose-colored lenses on, those losses are gradually still growing. But Meta reportedly shipped about 10 million Quest 2 headsets in 2021, and its virtual reality playground, Horizon World, hit 3,000 users earlier this year. It is certainly important to understand that Meta's metaverse business is a myopic cross-section of their business compared to 3.64 billion people who access at least one of their apps from Facebook Messenger, Instagram, and WhatsApp each month. Now, personally, I do think Meta will continue to burn cash as they concentrate on selling cheap headsets to lock in more users, but investing for the long term is what's essential here, and understanding time will take time. With more devices and metaverse experiences, this transformation could reduce Meta's dependence on targeted ads, and with the revolution already having begun, be an incredibly lucrative investment. Now, Meta's stock already lost a third of its value this year after they reported their earnings and gave little to no guidance for investors, so their share price, of course, fell from $384 to $203, which is a whopping 47% change, with their PE ratio now hovering around 15.42. That shock and awe moment when they came out with that weak guidance absolutely devastated their stock share price, as well as the value of the company as a whole. However, these low valuations that are being reflected now are due to near-term challenges for its advertising business, but investors who have faith in the vision for Metaverse should certainly consider accumulating some more shares today, at least in my personal belief. And now finally, I want to talk about keeping it much simpler by investing into a safer bet with Vanguard's Information Technology Index, ticker symbol VGT, which seeks to track the performance of a benchmark index measuring investment returns of stocks in the information technology sector. Essentially, this is getting a slice of the whole tech pie, inclusive of 357 stocks, totaling over $57 billion worth of assets, with the largest fund holdings being Apple, Microsoft, Nvidia, Visa, MasterCard to Cisco, Adobe, and Salesforce. Why does this approach come to mind? Well, going back to legendary Vanguard founder and father of index fund investing, Jack Bogle, he famously always advised for the investor to avoid anything fancy and stick to low-cost US stock market funds for long-term growth. So with a fund like VGT, you're gonna get growth and even then some with its dividend at an average dividend yield of 0.10%, which may not be much, but it's that growth that keeps us here. Now, YouTube, that is it for today. From Apple to Meta Platforms and a slice of the tech pie with Vanguard's Information Technology Index Fund. I'd love to catch your thoughts, so drop all those comments down below to let me know. Keep in mind that I am not a financial advisor, so always do your own due diligence following my videos. And prior to making any investment decisions. Now, before we get going, do me a favor and tap on that thumbs up button, as it certainly helps me out in growing this channel, but also do yourself a favor in subscribing to the channel. I'm seriously sharing with you that this is a win-win, and I'd love to have you on the journey with me. Now, YouTube, until the next video, I will see you all there.